new office and I don't even have an office chair yet, so I'm a little low. Let me try to fix my computer.
Okay, you can go ahead. I already you can go ahead and grab it.
Right. All right, you should see my screen now.
Yeah.
All right, good deal. Pull this stuff up here. All right, get my calculator. All right, let's get this going. So, what I wanted to share tonight, and initially to those that I was talking about this with, um, I'm not going to be not going to be teaching tonight about how to trade. How to trade. Um, we do that at regular. You got Cornell for that, and and I do some. Yolanda does some. We got different people do some of that. Everybody, a lot of people trade different. However you trade, if you get this tonight and you add this to your trading, you will be able to be highly profitable at whatever your style is. And so let me just pick out a chart and actually show you this. We have to use of course, a chart that has already moved. So it doesn't matter what chart we grab. Let's just grab, here's a GA. Let me go to a 4-hour. All right. Segment off some of this so we can use. Actually, I want to do this in my trading view. Let me do this in my trading view. Trading view up here. There we go. All right, now, what did I grab? The GA. I got GA up here somewhere, or it don't matter. There we go. There's a G. We can use this one. Change it to 4 hours. All right. Clear some of this stuff off here. All right, I'll go ahead and take off these lines too. All right, so I'm gonna show you something that many. First of all, you've probably already seen, which is what happens if you take a trade and lose, you take another trade and lose, take another trade and lose, then you take a trade and win, and the profit of the trade that you win is a lot more than the trades that you lost. I'm going to show you some numbers and some calculations with that. Many of you seen it, maybe some of you haven't. I want you to see that. And so then when I show you what I want to show you tonight, you're going to see how much difference this adds to the game. All right, so let's just say this section here. We'll use this little section right here. And I'll take a long position from here. Say up to here. I don't want to use that many pips. Well, let's see. Let's just use a good round number like 330. That's about 330 pips. And let's use a 75 pip stop loss. Just for numbers. We're just doing this for numbers' sake. All right. So I'm gonna do in this math. I'm gonna lose this trade 3 out of 4 times. You're gonna lose this trade 3 out of 4 times. Then when I take and show you what I want to show you tonight, we still gonna lose this trade 3 out of 4 times, but you're gonna see the difference of the numbers. So I hope you write these numbers down. I'll write them down myself. Let me grab a pad here. And at some point through here, my wife is, we just moved, so my wife is showing somebody the house. So somebody will probably come down here at some point and say, oh, I like y'all, or something. They may say, oh, I like your house. Just don't worry about it. My wife will tell them he's doing a training. Oh, are we recording?
Yeah, it's recording.
Okay, good. All right, want to make sure. All right, so we're going to take 75 pips and take that as a loss. So you do your calculator, 75 pips times 10. And we need a dollar amount. Let's use 50 cents. Let's use 50 cents for this. What we're gonna do that. So 75 pips times 10 times 50 cents. So if you had a 75 pip stop loss by 50 cents, you would lose $375.
Mm-hmm.
Somebody else do the math to see that? All right. Let's say we lost that trade 3 times. So 375, we lost it again. 375, we lost it again. So 375 times 3, that's $1,125 lost. All right. Now this is 330 pips. So let's say we won it on the 4th time. So 330 times 10 times 50 cents is 1,650. All right. So we had a 330 pip winner at 50 cents, and that was profit 1,650. All right, so if you take the 1,650 we won and subtract the 1,125 we lost, we would still have made $525. All right, everybody see that? Anybody, does anybody not understand that math and how that works?
Which is 1125. Okay.
Those were 3 losses.
That's correct. I'm with you on that. Then you got the 330.
330 pip win.
Oh, that's the win.
Cents. Yeah, that's a win. So 330, okay. And that's 330 times 10. That's the pips, and then times 50 cents, and that gives us 1,650.
Gotcha.
Okay. Right. So even though, and I'm sure everybody in here is going to be better than a 25% winning trader, but I'm doing this on a bad thing. I mean, on a low percentage, just so you can see how successful you can be.
Okay.
All right? So you still up $525, even only winning 1 out of those 4 trades. All right. Now we're about to do the same. We're about to take the same area here, and I'm going to mark it. All right. So this will be our first entry. This will be our first stop loss. And this will be our target, our starting target. All right. All right, so let's start again. We don't have to do these numbers again for the losses. Let's say again, we lost 3 trades in a row, 75 pips at 50 cents. We lost $1,125. All right. Now on this next one here, on this 330 pips, what I'm going to show you that profitable traders do. I've been talking to a lot of profitable traders. I mean, I've telling some of the people in the group, my cousin makes he's making a couple $1 million a year trading. I know a couple other people making big money. I even showed you a guy that was making, over $1 million on trade, just per trades in a week or whatever. And the way that they're doing this is they're loading up on their winners. They're taking their losses, cutting their losses, taking their losses, and they're loading up on their winners. And I'm going to show you an example of how much more profitable that makes you, even if you only win a trade 25% of the time. All right. And so I'm gonna write these numbers down, give you these numbers, and then we'll go over it. So let's say we lost the trade 3 times already. Now this is the 4th time, and now the trade is going in our favor. All right. So you can see my cursor here. This trade is going up, and right here, the trade plateaus and pulls back. All right. When the trade pulls back, and we see it pull back here to this 15 and pulls back again, and we go down to a lower, we would definitely go down to a lower time frame, like a 1 hour time frame, see more candles here, see some rejections, and see that the market is turning here, and we would enter another 50-cent trade here.
Mm-hmm. So they're
Right.
stacking.
Big time. So we take a long position here. Let's say we got in about right there with a 31 pip stop loss. And I'm just going to do a few trades on this one. I could do, if I went there, if I took this down to a lower time frame, which I would. Actually, let me show you right. I'm gonna do it right. I'm gonna show you how you can really make money. So this is our first entry on a 4 hour, right? Okay, we're gonna go down to a 1 hour. I'm gonna do it right. Show you how you really stack. Okay, there we go. All right, so now we enter the trade here. We're in profit. We get this good pullback here. See these 4 red candles, gets good pullback, this rejection wick, bullish candle here. And at the end of that, we will enter again, another 50-cent trade. Right there. Stop loss below that wick, same target, boom.
Wow.
All right, we see the markets coming up, boom. We see these red candles, another good pullback. And I'm even gonna show you another, I'm even gonna show you with another couple loss, maybe another loss or two in here, it doesn't matter. But we're gonna get in right here. Well, no, we wouldn't get in right here because we don't see any wicks. Here we go. We got some wicks
Waiting
here.
on a bullish candle with wicks.
Yeah, we're waiting on some wicks and then a bullish candle. So then you got, here's a rejection, here's a big bullish candle. All right, so we can get in here. And I'm gonna say we got in here. I'm gonna throw another loss in here because we can see this, but in real time you can't see it. So I'm gonna say right here, the market plateaued here, bottom, gave you this big bullish candle right here. And so we took another long position because you can take losses in this. Stop loss there, target is here, same target. All right, and on this one, you see the market came up, rejected when it gets you. So that one's gonna be a loss.
Mm-hmm.
All right, came down here, got a wick, bullish candle. All right, we enter another one right here. After this long candle, this big bullish candle closed, the wick there, same target.
So each entry going up is off of a bullish candle.
Yep. When when you see that there's been some type of reversal where the market is pulling back, and then you see bullish action again to say we're back in the trend. This is just trend. This is just trend trading. All right.
And it's small stop losses too.
Yeah, most of them are small stop losses because you went down to a lower time frame. And I did this on a 4 hour with a 1 hour. You can also do this on a 1 hour with a 15 minute. Doesn't matter.
Okay.
Or a 30 minute with a 5 minute. You can do this. And so here we go. We're going up. Here we go again. We're pulling down. There's a good wick rejection there. Waiting on some bullish candle. Boom, there's your bullish candle. So we could take one more there. Some people might not want to take that one because it's close to the target, but there we go. Right below that wick is your stop loss. And there's your target. And that was the last one. Now we're going to do the math here. This is still, we lost 3 trades and we got the 4th one to go in our direction. This is only 25% accuracy. When we do this on 50% accuracy, it's going to blow you away. So here we are, just on 25% accurate. So this first trade here, that hit the target, it was,
It's a win.
yep, this first one is a win. And how many pips was this first one? This first one was a big one. Yes, yeah, this is 4 hours. All right, so this first one was $13.99. All right.
13.99 pips.
Yep,
Okay.
$13.99.
Okay.
And so that's $13.99 times 10 times 50 cents.
My.
So who cares about 3 losses? That's just a 50-cent lot. All right, that's 6,995. All right, next trade here. This was another win. This one was 246 pips. So 246 pips times 10 times 50 cents is 1,230. This next one was a loss, 78 pips. So we're gonna do mine 78 pips, so 78 times 10 times 50 cents. So that's a $390 loss. That $390 loss is going to end up being added to our $1,250 that we lost. All right, so it's $390 loss. Next one is a win, 69 pips. 69 pips times 50 cents, so 69 times 10 times 50 cents. That's $345. And then the last one is 46. Yeah, that, oh, wait a minute. That first one I did wrong. Oh, I did those numbers wrong. I'm sorry. I was looking at profit and loss. I'm sorry. Scratch those numbers. Those wasn't the right pips. The first one was 329 pips.
Okay.
So the first one 329. Gotcha.
329. So 329 times 10 times 50 cents.
What's that 10?
1,645. This is how you calculate pips.
Yeah.
I know, but I'm talking about 10. What is the 10? That's just 10. What is that 10? Oh, the 10
Every
is
time-
part of the equation.
Yeah, every time the price moves, it's times 10.
Mm-hmm.
Oh, really? Okay.
Yeah. So 329 pips times 50 cents is 1,645. All right. The second trade was 152.9, so 153 pips. 153 pips at 50 cents. So that's 153 times 10 times. Hey, how you doing?
What's up with you?
Just doing a little trading.
I'm just being bossy. I'll be down soon.
Okay. I told you. All right, so that's $765. All right, the third one is this our loss? Yep, this our loss. So it's 102 pips. All right, so 102 at 50 cents. 102 times 10 times 50 cents is $510. So that $510 loss, we're going to add that to our 1,125. All right. The next one is a win, 103 pips times 50 cents. So 103 times 10 times 50 cents is $515. And then the last one is a win, 46 pips. 46 pips times 50 cents. So 46 times 10 times 50 cents is $230. All right, so let's add up our losses. We got 1,125 plus 510 equals $1,635 we lost. And then let's add up our wins. We got 1,645 plus 765 plus 515 plus 230 equals 3,155.
You took out the $510 loss too?
I added that in.
Okay,
With the 1,125, I added the 510
okay,
loss, so that makes 1,635.
okay.
So 3,155 in wins minus 1,635 equals $1,520 profit at just a 25% win rate.
Wow.
Now let's do that number at just a 50% win rate. Because if you're trading with good teachers and you should be able to get to at least a 50% win rate. So the same thing at a 50% win rate. We don't have to redo the numbers. That means that part of the 375 that we lost, we'll take that away from the losses. So that $1,635 that we lost, take away $375 of that, and that means we only lost $1,260. We did this at a 50% win rate. Actually, no, there's going to be another, we're going to double this, so there's going to be another loss in there, 510. So we'll add another 510 to that. So the loss is going to be 1,770. It's going to be our losses at a 50% win rate. Now, because we won two of these, that means we added on into our trades twice. So that means that this 3,155 we won, we doubled that. We did that twice because now we did a 50% win rate. So that's 3,155 times 2 is 6,310. So at a 50% win rate, that means that we won 6,310 and lost 1,770. Means that just a 50% win rate on 4 trades at a 50 cent lot size netted you $4,540 on just a 50 cent lot size. All by simply stacking on your winners. Now, a guy knows he would stack this same trade on a 15-minute time frame. That means you're going to add more than 1, 2, 3, 4, 5 positions. Go down here to a 15-minute time frame. Refresh. There we go.
What are the moving averages that you're using?
That's a 8 and a 15. I think it's an 8. Yeah, 8 and a 15. And I really, I never. It's kind of similar to something like that. But my cousin does this. I use this for like a lot of times on my initial entry.
Mm-hmm.
If on my initial entry, what I've noticed is, I wasn't looking to show that kind of stuff tonight, but like I'll show you why I use the 8 and the 15. Like I back tested this, and I keep saying, I'll show you several times, but I keep saying this, but like if I'm in a place of support and resistance or where I think the market is about to make its move, when I see a bullish move and the 8 crosses the 15, so my 8 is my orange one and it crosses the blue, the 15. Once the 8 crosses the 15 and I got a bullish candle, whenever I enter right there, the wrong position. Whenever I enter right there, price never, it never comes back to the last lower high on whatever chart, on whatever time frame, whatever it is. I'll show you several examples. I back test this all the time. Right here is another one. The 8 crosses the 15 right here. There's your bullish candle. Enter right there. Enter right there. Stop loss there. And that mug just took off and stayed with this one, stayed above the 8, stayed above the 15. As long as you,
Wow.
you know, until it crosses back over. I mean, you just stay in it.
Okay, and it's 8 and the 15 EMA.
Yeah, 8 and 15 anyway. And it does the same thing on the opposite side. See, like here, it helps you, keeps you from fake outs a lot of times. So like right here, if I thought that this was my area and I start seeing all these candles come down, well, I wouldn't get in because the 8 hadn't crossed the 15 yet.
Right.
And see, price had this little runoff back to the top side.
Mm-hmm.
And right here, when the 8 crosses the 15, and I got a bearish candle, I would enter a sell position, short position right there. Bearish candle, 8 crosses the 15. That's my last lower high. And that thing took up, never came back to that position, never came back to that stop loss.
Wow.
And you'll see it constantly. Like
so
when that one,
that style on the 15-minute or just?
No, I use it on a 15-minute to get a tighter entry. It does the same thing on the hour.
Oh, okay.
So if I'm like in a 4-hour chart and I see it on the hour, it does the exact same thing. That's just a larger stop loss. But I like to go down to the 15-minute because even like this one, this one, I would have missed a big part of the early entry because it's one of the moves where it came down here and price just took off. You didn't get no wavering, so it just took off. So, based upon that, I wouldn't get into here. Okay, so if I took the long position here at this bullish candle, the last low was there. Still, price never came back to it. So it's just
the last low as you're out.
Yep. And and I only look at it around where I think support and resistance is, but once it's just, even here, you see this big red candle that came down, then it wicked back up. That wick's usually a dangerous thing, but because the 8 crossed the 15 right here, and this was a bearish candle, still putting my stop loss over that wick, and it didn't come back to it until at least it gave me, gave you a good amount of pips until you see it start to cross back over or something like that. Okay. But it's just something I back tested, something my cousin told me about, and I started back testing it. And when I back tested, I was like, man, that's really a good safe entry, because I used to be one of the people that tried to enter early, really enter early and had them little small stop losses. But I've come to learn that small stop losses just mean you get more losses.
Yeah, because exactly. You end up hitting the stop loss.
Yeah, you just get more losses. Wicks come and knock you out. You just get more losses. And so sometimes it's just better sometimes to have, a 30 pip stop loss or something like that.
Give you a little wiggle room.
Yeah, give you a little room. Like this one right here. There's a bullish candle with the crossover. See how much this stop loss is. Enter long there. The last low was here. Like that. That's a 40 pip stop loss. It's okay because it never comes back to it. And it just keeps going up, It's 100, that's 121 pips, 1-to-3 risk to reward ratio. I mean, I'd rather, and even if I know a guy that makes really good money trading, and he trades a lot of 1-to-2, 1-to-1 trades. And we know 1-to-1 is not a good risk to reward ratio, is it? But the reason he does so well is because he wins like 9 out of 10 trades, because he has his stop loss in a proper place or whatever. And so I used to always try to get them 8, 9, and 10, and 13 pip stop losses or whatever. And you'll get them every now and then, but you're gonna get more losses like that too.
Exactly. Now let
You
me
know,
ask you this, because you definitely a fan of trading with the trend. This is what you're showing us. This is the strategy you're introducing us to
yeah,
right here
yeah.
with
This
these
is
moves.
trading with the trend. So here's the trend right here. See this trend going up?
Mm-hmm.
Okay, that's a trend. Now those trades I put on there was from the hour time frame. Remember?
Right.
But
Yeah, yeah.
I could have did those. I could have did that same thing from the 15 minute, and look how many more added winning positions you would have had. Now I'm on a 15 minute. Here we go.
And what
Boom,
I
boom, boom. Here we
and what I
go.
because I know you trade the trend. I know you trade the trend, but you were showing us, even though that's an uptrend going up, and you were showing us even with that technique, it goes down with that strategy.
Oh yeah, yeah. If you want to counter trend trade, you can do that with that entry.
But what I'm saying is, you don't do that though,
But
right?
I
You
don't
still
do that. No, I don't counter trend
okay.
trade.
Okay,
No,
you okay? Oh, okay.
no. So that would have been another added win. Uh, let's see. We already got that position. With that, if we would have came down on the 15 minute one, let's see, where would we have gotten it? Yeah, we got in that one there. We'd have got in that one there. Let's see, on the 15 minute, we still could have got, let me see, where's the cross? So right here.
Hey, Pastor Jay, I
We
apologize.
probably wouldn't have gotten that one.
I came in late, so you re-enter on the pullbacks.
Yeah.
You just add another position.
From a lower time frame, you add 4, 5, 6, 7 more positions in
Okay.
in the direction of your trend of your winning pay. The mentality is to load up on your winning positions. Instead of just having one position where your trade goes 100 pips and you know, and you make, let's say 100 times 10 times 50 cent, you know, you make $500 on a 50 cent lot on 100 pip.
Yeah.
Why make $500 when you can make $2,500 or, you know, $2,800 because you went down to a lower time frame and you just loaded up another 50%, another 50 cent trade, another 50, because it's already going in your direction. It's already trending your direction.
Right.
And
that's what was showing. That was Cornell was showing in his couple of screenshots. I was trying to figure it out. This explains it.
yeah, that is the difference, man. I've been talking to several people that I know that I'm talking about making millions on the trading, and I'm talking to them. I'm like, these cats don't trade no better than me. And I'm like, they take a few losses, they take wins, they do top down analysis, they enter on support and resistance. They're doing the same thing I'm doing. They look at market structure, they see the market structure has changed. I'm like, okay, these guys, they don't trade no different than I trade. They don't trade any better than I trade. Why are they making so much money? And all of them to a man did this. And I started seeing, I was like, I see every single one of it. And so when I looked at they would show me their phones and show me their, you know, MT4 and show me their platform, looking at trades, and they have like 10 trades and they all be in blue or whatever. And I look at them close and I'm like, they all the same. It's 10 gold, it's 10 GAs, it's 10, you know, GJs. It's the same market, just loaded. They just wait to get a winner and just load up on the winners and ride the winners. And it doesn't, and when you're pretty profitable, I mean, not profitable, when you're pretty good in your trading strategy to where you know, so what they do now is they don't have to take as many trades. Their lot sizes are larger. One, in fact, my cousin the other day, I was talking to him while I was talking to him, he threw a $5 lot on a trade and made like $14,000 in 6 hours on a $5 lot size. And he wasn't even thinking about, he wasn't even looking to trade at the time we were just talking about. He just saw the trade. He was like, man, I need to get in this trade. Let me throw a $5 lot on here or whatever. Got in the trade. 6 hours later, got out when he saw a big rejection that it looked like it was going to change directions, and it made $14,000 just like that or whatever. And all of them to a man that all load up heavy
Like this.
direction on it, just like this. That's the only thing they're doing different from anybody. And here's the thing. many of them have trading. They have YouTube pages where they teach people how to trade, and they have classes and things like that. They put free stuff out there, and I was wondering, like, why do they put so much free information out as far as how they trade with their market structure and their top-down analysis and you know, all this? But you know what? Not a one of them put this out there.
Okay.
On none of their pages, on none of
Okay.
their YouTube pages, do they ever talk about how they load up on their winners. None of them do.
Okay.
And that's the secret to making all the money. Because if you can make so much money on a winner, then a loss doesn't bother you. My cousin Chris would get in a trade and he'd be like, let's see, I could risk losing $1,000 on this trade. It doesn't matter for him to lose $1,000 on a trade or whatever, because he knows that when he catches one, it's $14,000, $15,000, $16,000, $17,000 in it when he catches one. So and so here's the other thing. That means that your analysis on your trades gotta be at least 4 hours to 1 hour at the least, because you want to have trades that have a potential to really move in 200, 300, 400 pips. Now you can go down. They go down to the 15 minutes to find the market, to find the re-entries, and one dude even goes down to 5 minutes, and he takes even a lot more losses in his, but he gets so many more winners too that it overrides his losses. But you can go down to 15-minute or 5-minute to keep stacking. That's what they call it, stacking the winners, stacking your winning trade. But on the analysis, you want to be making an analysis at least on a 4-hour chart. So that way, even if you find a sideways market, on a 4-hour chart, and that can be, major. Let's see how many pips this is.
Do they use the same? Do all the ones that you talk to, your cousins and them, they use the same EMAs too? So they all trade the same way. Is that what you're telling me?
They all trade the same way. Some of them don't talk about their EMAs until they get into a trade. Like my cousin, he showed me this, using this EMA to enter safely.
Okay.
But like some of the other ones, some of them wait till they actually are in a trade and this trade is moving in a direction, and then they'll throw an EMA on there, because the EMA kind of acts like a
confirmation or something.
A support or a moving support or resistance. That's what they call it.
Gotcha. Okay.
It acts like a moving support and resistance. So like my cousin does, every time the price comes back down to the to his 15 EMA or the 8, whichever one. Every time it comes back to the 8 or 15 EMA and it rejects off of there and that holds it, he enters again. Every time. So like way more positions than what I just did. So like this right here, section right here is 358 pips. But if you took that down to a 15-minute time frame, or this ain't even that position, but look at this. Look how many times the chart. What's up?
Oh, I thought that was Kate. Hey, how you doing?
He was nice to you. What's up?
You on camera?
Wave, say hello.
Hey, make that money, man. Make that money.
All right, keep it moving. Okay, so you see here. So let's say you got in a.
I love you.
Here, give me one of your hugs. Give me one of your good hugs.
I'm hugging. She's not
Oh,
hugging.
okay.
I am.
You can't.
Yes, I am.
I don't got a mask on. Okay. All right, keep moving. All right, so right here we are. We enter this trade here on 8/15 crossover with bullish action, and we are in a long position right there. We'll stop there. And so this is what my cousin Chris does. See right here, price came back down to the 8 and rejected off of it. He enters again. He uses that as a moving support and resistance. Here we go again. It came right here. This time it came to the 15. Got two little rigs. It held. It didn't close. As long as it don't close below. He said you don't care if it comes below, but as long as it don't close below. So it didn't close below the 15. Right there. He enters again. And those are real short little stop losses that he's entering those trades. All right, right here, come down. Right here it held, he entered again. Now we see it's going to be a loss, but he don't care. You know there's going to be some losses in there. But right here it held, he would enter again. And see, that one was a loss. But you know that he knows that in a trend, you're gonna have the little support, and you're gonna have that big pullback, and then it's gonna start back again.
Mm-hmm.
So you can't be afraid of a loss, if you want to load up. So here it comes again. Here we go again. You got another. It held again right here. Be in it again. Came back here. You still in it. Didn't get below your stop loss. So that one you won again. Okay, you got to close here. So now you're watching that, but he's not closing these positions because you didn't get out. The 8 didn't cross over, so you ain't closing on these positions. And boom, boom,
Pastor J, on
boom.
that previous one, what was your stop loss? How much was your stop loss on that?
This one right here,
Yeah.
11 pips.
Oh, okay, okay.
11 pips. And
So
this
just
pullback here
below-
did not go below it.
15?
Yep, just below this wick right here.
Okay, okay,
Just a
gotcha.
couple pips below that wick. Mm-hmm. And this pullback here did not stop you out.
I'm sorry,
And
you're getting your confirmation from the 15, but entering in on the hour or the 4, or does it matter?
I'm on a 15-minute, and I'm using this support and this 8 and 15 EMA. I'm using them as a moving support.
Right.
So every time the price comes back to it and it holds, and I'm
hold
in
up.
an uptrend, I'm in a trend, I buy again.
So you're basically getting in off of the wicks.
Yep.
Basically.
I'm basically getting in off the wick. Now on this one, it closed, but I got the next candle that came right back and gave me a bullish engulfing.
Right.
So I would use that wick, and this closed above here. I'm in a trend, so I would add it again.
And that's
one.
the plateau you were telling us about.
Yep.
Okay.
And
Wow.
this is how when this would be even more trades than what I was adding. There's another one there. Boom. So at this point, let's see, do you get right here, you get a crossover close right there. And so now you can close all those positions.
So he basically stays in it until the 8 and the 15 crosses back over.
So it crosses back over.
In the red.
He just answered
Oh my gosh.
And then guess what? Even though he gets out of all these positions, and they were winners, even though he gets out of all these positions,
now he's gonna take it back to the downside.
What he's looking for is this market to continue down here to about 50%.
Wow.
So once he's out of the trade, he know the trend is still going because he knows where his original target is. He trades.
That's what the original target.
His original target is like 350 pips. This ain't 350 pips. It's only 130. So he know this trade ain't done. This trend ain't over. You just got a big pullback here, and he don't want to give all his money back. So he closes all those positions, and this market structure now is moving down. And what's going to happen is it's going to get down to about 50%. He'll throw a Fibonacci on it. Right here, he'll throw a Fibonacci.
The big rejection on a higher time frame.
When the market gets down here to the 50% area, he starts looking for the market structure to turn around. Once the market structure turns around right here, he starts his whole process again, enters again, and starts trending back up And he already knows where this next one is going because this next leg is going the same amount as this leg.
Let me ask you this quick question. As far as the target, when he first started off at the very bottom,
A 4-hour target, like a support
Okay,
and
got it.
resistance from a 4-hour target, maybe about 350 pips. So he uses like most of them use our regular support and resistance levels for targets.
Right.
He uses he calls them like bank levels, where he does round numbers at these levels. So
Right.
you go to the daily, like if you have these daily levels and you go over there and it says 1.245, or he around that to 1.25, and he uses those as his levels to trade from. And I think I was telling y'all about my cousin Chris. He only trades 3 markets, and this is why he can only trade 3 markets, because he knows the moves. And so right here, this market went from here up to here, and then start turning around. That's 184 plus this 36 pips. So that's about 215. That's about a 215 pip move. Once it gets here to 50% or 38% and turns around, he already knows it's going to make another 215 pip move up.
Okay, so initially he knows that he starts on the higher time frame just to get his high and low, basically.
Yeah, to get his high and low. Yeah.
Okay.
So
Then he drops down to the lower time frame, and then
to
after
get all
he
these
already-
entries.
Yeah. Okay.
Oh, okay.
Wow.
Clean up. Go to another chart. Clean up. If you remove all those.
So this will work on NASDAQ too?
Absolutely, it'll work on
Nasdaq,
NASDAQ. Because you know why I tell you it'll work on NASDAQ? Because one of the markets he trades is gold.
Oh, wow. Oh, yeah.
So if it'll work on gold, you know it'll work on NASDAQ.
Oh, interesting.
Well, you already know I'm going to be back testing this.
Yeah. So what he'll do is he'll take a 4-hour, go to a 4-hour chart, squeeze it back, 4-hour daily, squeeze it back and look for he'll start marking support and resistance.
Yeah.
Okay, 4-hour chart. Okay.
Yeah, so 4-hour chart, he'll say, okay, I see some activity there. Boom, boom, boom. Same stuff Cornell teaches. I'll see some activity there.
So he's just basically marking the activity areas on the higher time frame.
On the higher time frame. And
to
then
know where he's
look at
his target.
to know where he's going to target. Yeah. Because look here.
How you been doing yours? What time frame you been marking yours up as far as your
4 hours?
Okay.
I mark up on the 4 hour just like this. And then, yep, Yolanda saw it. That's what I was just going to point out. You saw this double tap right here. So where's your next target? Here.
Down.
Your next target is down here, at least to down there.
Yep.
So how many pips is that on a 4-hour short position down to here? That's 617 pips.
Oh, yeah.
On a standard times 10.
Yes. And then now think about it. So this from here, price went up 610 pips, right? So let's count this from this double tap up here. That's about 600 pips.
Mm-hmm.
Let's mark this area, and we're gonna go look at it.
Let's say you catch the first double tap, because it double. Look at the one next to it first, and then it came back around.
Yeah.
Again.
And so I'm just gonna take it. I'm just gonna take it just from there.
Okay.
Let's go back down to a lower time frame.
Yeah, let's go to that 15-minute.
Go to that 15-minute.
15-minute, okay.
We know the price. We know he just believes he knows that this price more than likely is going over the next week or two, 615 pips.
Wow.
It's just a matter of how many entries am I going to be able to get in it. And so here we go. Let's start here, blow it up.
And even like where you're starting, you can see it never came back.
It never came back.
Low, it never came back.
Never came back. So here we go. We got a bullish candle, 8/15 crossover. So we take our first long position there, and stop loss just below that wick. That's 19 pips, basically 20 pips. And that's that target is that target. We know that that target's going to be like 615 pips, even though he know initially he's probably not going to let it ride 615 pips. But that's where the target is. The target is like way. The target is like way up there.
Up there, okay.
Right.
Yeah.
But then
All right.
would his out be like when it crossed right there?
Yep.
Okay.
His out is going to be
Right there.
right
Okay.
there when it crosses and
Hold
you
the
get that
ball.
big bearish candle. It's drop.
So
But
now
guess
he's
what?
doing it
Look
both
how many
ways.
look how many positions he's gonna have. He's gonna have this one,
Yep. And
this one, that one, that one, that one, that one. He's gonna have one.
every time it comes
two.
back and touches that, every time
Yep. Every time it wicks. So 1, 2, 3,
Gotta have that wick. Gotta have the wick.
4,
wow.
5. He's gonna have 5 more entries in there before this crosses over and he gets out. So if I bring it back down and see where you end up out at.
Oh man.
Over,
I know I'm being
that's 128 pips on the first one.
wow.
That's
Time.
probably another 50, probably another 75. That's probably another 50. See what I'm saying? How many extra positions you have? And then now watch this. This is where his magic is. This move from here to here, or from here to there, he measures these moves.
Man.
So from here down to where this move started was 180 pips. That's what so when this move comes out here at 50%, put this fib on it, he's looking for another 180 pips. There's your fib. There's 50%. Bang,
wow.
Double tap at 50%.
Yeah, that's a W too.
And a W. It's all the same stuff. Double tap W right at 50%. Goodness. And now he's looking to ride another 180 pips and to stack them.
Boom. Look at there.
Look. It went another 180 pips.
Yep. Clockwork.
Clockwork.
And then you know what?
And then he added another position here. Added here. Lost that one. Added here. Added here. Right here. So he knew it was going. He already knew it was going another 180 pips because it went. Anytime it makes this long measured move and comes back to 50%, it's going to repeat that leg. It's going to do the same thing. It's going to make another leg the same. And and he does that over and over again. When he sees a market, coming to 50% and hold, he knows exactly how many pips it's going to. And I've been back test. He does it. It does it like 8 out of 10 times. If it comes to 50%, it does it like 8 out of 10 times. Now, if it goes to 38% or 67%, not necessarily. But if it comes to 50%, that is a standard trend, and it's going to make another leg the same amount, and it might do it. Sometimes it'll do it another one too. Like let's see if this is 50%. Throw the fib on here. We started there. 50% is there. Yep, that's about 50%.
Mm-hmm.
So you probably should get another 180 pip measured move. So
look at that long wick that stood out, and then
move this up here again. And let's see. Did it do it? Did it do it? It did it again. And look, it starts to turn around right at the mark.
Wow.
It turned around right at the mark. It went another 180 pips and then started to turn around again. It's like clockwork. And he knows eventually that trade is going to, this is probably already up here to our mark, our 600 or whatever. Yeah, 180. We did 183 times. 180 times 3. That's 540. and then a little extra. This was probably our ending spot right there from the 4-hour time frame. I'm talking about clockwork. It's clockwork, and all you got to do is identify in the market what it's doing from higher time frame support and resistance levels.
So you don't really look at the for this here, since you mark it up on a 4-hour time frame, you don't really necessarily do you still looking at the higher time frames, or you just go ahead and mark
I still do a top-down analysis just to get an idea, but here's the key. I do a top-down analysis to get an idea what the overall, next few months direction of the market might be. But you got to understand, when you do a top-down analysis, understand is that what you pay the most attention to is the time frame that you want to get in and out of your trades. So, for example, if you want to go into let's say you want to go into the NASDAQ and get into a trade at 7 this morning and get out at noon, it doesn't matter what the 4-hour is showing you. That's just too high of a time frame for somebody who wants to be in and out of the market in 2 hours.
Understandable. Okay.
Yeah, that time, because in that time frame the market can move in different directions, do so much. So for me, I want to be able to get a good amount of pips where I can get in and out a few more times, and I want to be able to get out of those trades like in a day and a half. You see what I'm saying?
Understandable.
And so for me, the 4-hour to the 1 hour is kind of where I be. If you want to be like Cornell, if you stack, get your money right, and you want to just put in and let that pip go 600 or 900 pips, and just let it ride, and take your money in 3 weeks, then you look at even a monthly to a weekly. You look at a higher time. So the time frames, those time frames help. They give you an overall analysis, but what you focus on is how long do you want to be in a trade, and so. If you're getting ready to play the opening of the NASDAQ and you want to get in and get 50 points or 20 points, 25 points and get out, it doesn't matter what the 4 hours doing. It doesn't matter what the 1 hour is doing, really. I mean, they help for that's probably a 1 hour is probably your top support and resistance. And then you look for a double tap like Yolanda does or something like that. You wait for that double tap. But if you really trying to get in and get out, the lower time frames are good enough for you. If you're doing a 5-minute or 3-minute chart, you can look at a 15-minute chart, But for me, I want to get something that has about 300 or 400 pip potential in it, where I can go down to a 15-minute and stack it.
So what you do is you mark yours at the 4-hour, and then you go down to the 15-minute off of that,
first I'll go down to the 1 hour to see more candles.
That's what 1 hour first. Okay.
Yeah, I'll go to the 1 hour first. So when I mark a support and resistance level off the 4 hour, and then I'll go to a 1 hour to see more candles. Let me remove that, Joe's drawings. Then I'll go down to a 1 hour to see more candles.
Okay. Oh, I see what you're saying.
Yeah, so like here on the 1 hour now, I see more candles, and I see this area is holding because I see more candles. I see that's the Cornell sees at 1, 2, 3, 4. If it keeps holding like this many times, it's probably ready to go up.
Mm-hmm.
And so once I see something just hold like that.
But that was probably one of your lines you drew in the 4 hour anyway.
That was probably 1 hour from the 4 hour. And I see that line holding it, whatever, then I know that when it's ready to go, it's ready to go 300, 400 pips or whatever. And now I can go down to a 15-minute for a more sniper entry. And I'm gonna show you why. Because right here, if I waited for the 8 to cross over and the bullish candle, that bullish candle on an hour ended right here.
Mm-hmm.
And oops, that's the wrong way. Let's get a long position. That bullish candle ended here. And I mean, my stop loss would have been 126 pips. I'm not doing that.
Mm-hmm.
But this same position right here, if I go down to a 15-minute, I guess I should have closed up to find it. There it is. All right, so now I come down to a 15-minute and look forward. Let's see how many. That one was 126. This one's going to be crossover bullish candle, stop loss below the wick. Boom, boom, boom. 19 pips. See the difference?
That's better. Yeah.
They're gonna get still take it
now
off.
it's now it's a 19 pip stop loss, and I got in it better, and I'm still taking it all the way up. And I got a re-entry here, big wick here, re-entry here. There's 3 more. That's not a wick, but that's a hold. That's 4 more. That's a wick. That's 5 more. That one is not going to net me much because of this, so I'm gonna get a loss on that one, but I'll take wins on all the rest of those.
That's sweet.
That's just. I mean, that's just like. And listen, this is another thing that this mindset helps you. When you know that this is the potential of a good winning position, 150 pips, 350 pips with multiple stacks on it. When you know that that's a potential, you are more patient to find a good entry.
Mm-hmm.
You are more patient to find price dancing at your support level and waiting for it to show the bullish activity. And even in this one, this was my area. I'm trying to say I might have took a loss here or somewhere waiting on this to, let me see. Do I get a cross here? Not on a wick. Bullish. There's a cross here. I could have maybe took this position. And even if I did, I wouldn't have lost. I'd just been it'd have been dancing longer. But right here, it crossed over, gave me a bullish candle. Below here, a 42 pip stop loss. That's a little bit bigger. Guess what? It had been dancing around longer than I like, but it never came back down to it. Never came back down to the stop loss. And so I still would have been in it.
Wow.
That's sweet.
I mean, that's a good, when you, again, remember, you gotta be at a good support and resistance level, see multiple double taps or things like that. But when you're at a good support and resistance level and it gives you that crossover, 8 times out of 10, even if I took it here, let's see, when did it cross over? No, okay, that was that wick. I wouldn't have took it there. So no, this would have been the only entry here. Either this one, that was too high. I would have needed to wait for it coming back down. Let's see.
I like this.
Yeah, this would have been the next one. So either one of these 2 entries here or here, I'm in that trade. And once it takes off, it ain't coming back and it's stacking. And then here's the 50% move. That's what one of these days, some of the newer people need to learn Fibonacci, and I might get in there and do a Fibonacci training too. See, that came back to 50%. Double tap, re-enter, bullish candle. You already know how far it's going, however far this move was. It's a measured move. It's clockwork. It's clockwork. It came right to the point and then turned around and went the other direction.
Legit.
It's clockwork. You can't make this stuff up.
Shit.
All we do is
You,
two EMAs. That's it. Naked chart, two EMAs. Do your top dollar analysis.
yep. All you, the most stuff that's should be on your chart is what you draw on your chart. Your rectangles or whatever for support and resistance, your Fibonacci's. Oh, that was the other thing. Every single one of them that I taught, every single one of them uses the Fibonacci.
Okay.
And that's what Cornell used to do. Cornell uses the Fibonacci. He just now uses it in his mind. He can see a 50% move in his mind. He said that forever. He's like, I used it so much early on, I could see it in my mind. I can see without putting it on the chart because that's 50%. And then boom, we're in. So even Cornell knows that. But every single one of them, they use drawing tools that they draw on, and they may use one moving average or something just to be a moving support or a moving resistance. And they don't use a lot more than that. A trend line, maybe. A couple of them use trend lines. And when they use trend lines, they don't use them to be necessarily precise. They just use them as to say, this is the direction that we're going in. So, we're pretty much just taking buys.
Because usually we had that trend line the way you just drew that right there. We have to wait all the way until it come back, and you don't even have to wait
all the way to exactly. You don't have to wait that long.
You have to wait
because because you know where the market's going, and so you just every time it rejects, there's another move for you. Here comes that reject. There's another move. Here's a pullback. It's almost like, even if you want to just look at the color of candles, like you want to look at two things. You want to look at rejection wicks and the color change. So when you got green candles going up and you get a series of red candles, as soon as you get that hold, they re-enter again. Here's some more, a series of red candles, 2 or 3 red candles. You get a hold, enter again. Here's a big red candle and a hold, enter again. And here's your 50%, enter again. Here's a red candle and a hold, enter again. Here's a red candle, wick hold, enter again. Here's a couple of red candles and a hold, enter again. It's just like clockwork. And you can feel set, you're gonna lose this one. You'll lose that trade, but that's okay, because you're gonna enter again. You're gonna enter again. You're gonna enter again. And you'll probably stop entering here because you already know it's going 100, you know where it's going. Mm-hmm. It's a measured move. Like when you look at like my cousin Chris, you think he has a trend line on his chart. He doesn't have a trend line. He has a line, he has 180 pip, not 180. He has a line measured the same amount of the last move. So if this move was like that, when you look at his charts,
okay.
They'll look like that. And then he'll have that cloned. He might just change the angle of it, but he'll have that cloned over to the next, whatever the next 50% position he gets in, and something like that. And he'll know, look, there it is again. Let me get it right to the bottom. Let's see, right there to the bottom, right there to the top, right to it.
That's
3 measured moves right to it. So you'll see, he'll have this line on his chart, and it's not a trend line. It's just a line showing him that that's where my take profit is going, because that's where the last move was. Last move, 50% Fibonacci, and then it continues. 50% Fibonacci is your friend. Right? I'm telling you, you got to get used to it. So when you see a move take off, and you're looking at your chart, you see a move, you say, oh, I missed that. Oh, I missed that. No, you didn't. Just wait. Either wait till you're 50%, wait for a 50% pullback. Don't get tricked out. See, that's what the successful traders know, that big turn is just a pullback that tricks most people. They think that the direction has changed. And so they start looking for sales. Those cats are not looking for sales if the market is going up and starts to pull back 50%. If it pulls back 63%, they still thinking buy. They're not thinking that the trend has changed until it comes down and gets past the double tap, the bottom.
But the EMAs is helping us out tremendously.
But the EMAs is helping you out. That lets you know when to get out, take your money, and then you know when to wait to enter back in. And when you enter in, you just that's all they see this as is a support line. And when you find a downtrend, you see it as a resistance, a moving resistance line. That's all it is for them. It's not. That's all. It's all it is. It's not something where people say well, moving averages are a laggard. They're lagging indicators. So you can't. Yeah, that's why they don't use them as indicators. They don't use them as indicators. They just basically use them as a moving support or a moving resistance. They don't use them as indicators. They don't believe in indicators because they know indicators are lagging. They know that. And so, now you do have a few successful traders, some successful traders that'll use some stuff, RSI and things like that. But we already talked about that one of the last times we were talking about. You don't really need that. If you just look at price, you'll see it before they see it. You don't need a lagging indicator to tell you what price is going to do. You know by reading price action, by reading market structure. And guess what? Even if I didn't have these indicators on here, watch this.
Get an eyeball.
If I didn't have these indicators on here, and we were in this trade, I see red, pull back, wick, re-enter. Red, pull back, green, re-enter. Red, pull back, green, re-enter. So I was still entering the same thing. Here it is again, going up, red, pull back, re-enter. Red, pull back, big wick, re-enter. Sideways, boom, there it is, red, pull back, re-enter. I was still, I could still see it, but that 8:15 helps me when it crosses over. It really helps me. Oh, that's the other thing. Let me put this back on and I'll show you. When it comes to those 8 and the 15, when the market is usually when the market's getting ready to turn, okay, like right here. Okay, so we've been coming down, right?
Mm-hmm.
And then we're gonna turn around and start going up. Okay, well, this is normally what you'll see with those moving averages. So when we get a down move, it's coming, it's over. Watch this market structure. So we come here, we get a low, a little double tap here. Market starts to move back up, double tap. It doesn't go any lower than that. Moves back up, get a low. So now the market structure has changed. So now you're getting lower high, higher low, lower high. So now the market structure has changed. But guess what? You didn't miss anything here. Very rarely. Sometimes the market will come down here and just take off. But 75% of the time, you're going to get this sideways move before it goes back up. Because it's cut. Yeah, see this sideways move right here?
A big one, okay.
You're going to get that on all time frames. You're going to get that. And there's a reason why you got to get that. If y'all read that PDF, you'll understand this. The reason why most of the time you're going to get this because for the bulls to get the amount of positions that they need in the market, they got to add a little here, a little here, a little here, a little here, a little here. And once they got enough of them here, boom, boom, there they go. Then they add a few more here, boom, then a few more here. But they can't, if they wanted to add, let's say this was 1,000 lots, they couldn't if they put 1,000 lots here, price would just take off and nobody would sell against it. So they put 200 here, 200 here, 200 here, 200 here, 200 until they get their 1,000 lots in. So that's why you get, a lot of times you get this sideways movement before the price turns around. But what people don't know is they think that, okay, price is turning around here. And so they got to hurry up and get in. And then market price comes right back down and stops them out. And they add, and it does it a couple times.
Now you talking about the momentum PDF, by the way? That's the one you talking about?
That
the momentum.
MMA. Yeah, the volume.
You said momentum, the volume. Okay.
Volume PDA, yeah, the volume PDA. Yeah.
Okay, I just want to. Okay, thank you.
Yeah, so most of the time, that's what price is going to do. Is going to make a series of moves down, and then it's going to go sideways. Then the market structure is going to start going, up in a different direction because they need to add They need to add positions in. Now, you know, the other thing that it'll do is it may go way down below their area and then give you a strong wick. You know, give you that big wick. And you know that they just put a lot of positions in down there. Don't even fool with that price. That we're going in another direction. So you just got to get, I don't know if any of y'all still struggle with that, but you just got to get out of your mind that I missed the trade.
Mm-hmm.
Just don't let that enter your mind. Price is usually gonna come back to you. Even if you saw this sideways action and then it took off here. Oh man, I for real missed it this time. Pastor Jay said I can't say I missed the trade. I really missed it this time. Nope, here comes 50%, boom, boom, boom. Now, to be honest with you, this is maybe even a safer spot because you know how far it's going the next time. Because you can calculate this amount of pips here. You calculate that, and then you know, once the move takes off, you know where it's going. So you ain't missed nothing. You know, you haven't missed anything. Listen, I know it's a lot tonight, but listen, if you take any of Cornell's strategies, get in, you know, you take the phases, you get down at the bottom of phase 1, at the top of the phase 3, you can do this in a long position. And Cornell taught the hedge fund people that when the market starts to, you know, you get in down here at the bottom, price ain't never coming back down there. But guess what? As it goes up, it comes back. They can take money out and enter again. You can do this on a higher time frames as well. Every time frame, that's what that PDF talks about as well. Every time frame, they have people that trade on those time frames. The big banks, the 10 banks that move the market, they have people that trade specifically on all time frames. So you're going to see the same activity. You're going to see the same Fibonacci moves. You're going to see the same activity. And all this stuff right here, these fake out moves, you're going to see all that. What's the name? The guy was been saying the last couple. I haven't been I've been moving the last week or so. So the last time my computer wasn't hooked up, so I wasn't in doing a lot of stuff. But he was talking about learning fake out moves and all that kind of stuff. Yeah, fake out moves. They're getting people with fake out moves because they want to fake you out, take your money, and then add more positions. Fake you out, take your money, add more positions. Take your money, add more positions until they're really ready to go. Listen, I'm gonna say this to somebody out here. Somebody may be sitting in here watching this today, or they may watch this recording, and they don't, you know, they haven't really grasped a strategy yet. Maybe they're working on the long strategy that Cornell does, or maybe working on the double tap on the NASDAQ or something. If you just added this one thing, when I see the market make a measured move, or we would call it an initiation, when I see the market make an initiation or a good measured move away from price and pull back to 50%, I will calculate however many pips that was and take that as my next stop.
Now, you know, I just have to let you know online, you are talking directly to me in this particular instance. I just told Yolanda earlier today, I said, I don't have a strategy. I was told I don't have a strategy. I see what you get. I see.
That works. You can take it on any chart. Any chart. Oh, what's the NASDAQ on here? Let me go back over to, it's NQ1, I think. Oh, that's not what I wanted to do.
You want to pull it on that one, on that trading view? Okay.
Yeah, I'm gonna try to pull up the NASDAQ on Trading View. Okay.
If you pull up that market watch, that may allow you to.
In Q1, I think it's in Q1.
There we go. Okay.
Why is some candles looking like that? Maybe that's
Start with space, like where?
In Q1?
maybe it's not in Q1. Let's see.
Type
I
in
don't
the
think
end
it's-
of the queue and then see what options you have because it has some other options in there. If you type that in queue again
Oh,
to see
yeah.
what you have to pick, what you can pick.
Uh,
Okay.
um,
Oh, go to
let me put in NASDAQ.
go to indexes. Indexes up there at the top.
Oh, yeah.
Check that out.
Maybe it's US 100.
Yeah.
There it is. Okay.
Yeah.
Okay.
The
Good.
light,
There you go, Arthur. There you go. Thanks, Arthur.
the light comes on every now and then.
Hey. All right. So this is 1 hour. Usually I can see with my eye 50% move. Oh, that's just been in a trend, man. It ain't even giving you no 50% moves.
NASDAQ has been going up.
Okay, this might be one right here. Let's
Yeah.
see. There we go. Let's put the fib on it. Actually, this move, yeah, started right there, finish right there. Okay. That's a little lower, but it probably will work. We'll try it.
38%.
See, this was a long position. We're gonna measure it. Right, and we'll move it over from here where it took off. Get it about right. That's pretty close. Yep. Look, it did it. It did it. Came back, took off, went right to the target. Now this is probably another one.
Yeah.
See, you can get to where you can start seeing it with your eyes. All right, and usually they're going to be the same. So this one came down to about 38%. This one came down to 38%.
That's why you normally get in on the retrace back on the
I
30.
work on that Fibonacci, then I gotta learn how to use that. I haven't used it. I don't use it. I gotta work
And
on
then
it.
there it is again. It came up, went a little higher, but I mean, hey, would you take that? Yes. Bang. And then this time it came all the way back down. So you know you didn't get it. But I remember I said at least it'll do that measured move once you catch it 50% or 38% retracement, you'll usually get 1, 2, 3 legs out of that.
Oh, okay.
Yep.
That's on the hour. Wow.
Yep, that's on the hour. So that's a lot of money in the oh, let me clone this. That's a lot of money in the NASDAQ, Yolanda.
I know. That's why.
You got me scared and carried on, but I'm
scared.
And that means, and when you know this is what's going to happen, when you see a little pullback like that, you don't got to be scared and take your money. Because you know that you got these
look at those wicks.
You know you got those measured moves coming.
Look at the wick.
So maybe we could do a class on this, just marking up charts on this, a little segment.
Yeah, we can do something like that in a couple of weeks. I'll do something like that.
You know, I'm just saying.
And you know, learning, because people need to know how to use the Fibonacci. Because like my son's starting to trade now, and he was he got off into that IML, and because they push the multi-level marketing side of it as well a lot, and so he got into that. Got a lot of people following him, which is cool. But I said, but he said, you know what, Dad, I'm gonna get in it for that, but I got you to show me how to trade or whatever. I was like, okay, cool. So he showed me a video from one of his teachers in IML about using the Fibonacci, and I almost threw up. It was disgusting. I was like, what? All he was basically doing was showing the move up in the 50%, but his Fibonacci didn't even have the extensions. So it didn't even tell him that, okay, if you go here, you at least go up to 127 or the 1618. It didn't even have the extensions on it. It just said if it comes down here to 50, all right, that might be a good place to support. Oh, that's fine or whatever. I say, I bet you he ain't gonna tell you that after it comes to 50, I know exactly how long it's going the next leg. And I said, I bet you ain't gonna tell you again. I know exactly how long it's going the next leg. And he was like, I showed him this. He was like, what? And he's like, dude, he's like, that don't nobody in there know that. None of them teach that. I said, they don't know that because their main thing is giving signals and doing multi-level marketing. That's their main thing or whatever. I said, they're not gonna get you. They don't know stuff like this.
No, your cousin that trades the gold, is he on the hour or does he drop down to the 15?
Yeah, he drops down to 15 for entries.
Okay.
He makes it just depending upon what the chart looks like, and this is how he teaches it. He goes to the daily to look for a support and resistance level or the 4 hour, either one of those. He's going to the daily or the 4 hour to look for support and resistance levels. But remember I told you he only trades 3 charts now?
Yeah, you said gold and a couple others.
Yeah, gold and 2, like one GA maybe, and
Two
GA
forex
and something. Yeah, 2 forex pairs. He trades gold, 2 forex pairs.
Okay.
And he's been trading these 3 so much that he has support and resistance levels on there that's all he uses is those same levels.
Well, let me ask you this: with your cousins and the gentlemen that you have talked to that does this and introduce you to this, what are the favorite pairs that they use? In other words, what's your favorite pair for this? You know, because I can't go on
now there's different mindsets on this. Okay, now this is where they differ. So this is going to be on the individual. So I'll give you to what the different ones have told me. So they differ on this.
Okay.
My cousin Chris, he's down to like 3 pairs. He was at like 7 pairs like last year. Now he's down to 3 pairs.
Okay.
But so a couple of the guys say, hey, once you find the favorite pairs, you like the way they move, you know how they rock and roll, just stick with them. But then some other guys say, hey, if you got a specific strategy that will work on anything, then you just look for your strategy on any pair. It doesn't matter. It doesn't matter the pair. If this Fibonacci thing, it doesn't matter what pair it moves on. Now, the reason why some of them use certain pairs is because, like, for example, this is one they all do. They don't trade this, but they all read it, the US dollar. None of them trade their majors without reading the US dollar. Why? Because look, the US dollar has been in a downtrend on this chart. It's an hour time frame. So it's been in a downtrend basically since June the 30th. So that's a month.
Is that what is it?
That's a month that it's been going down. Huh?
What is that? Is that a forex pair, US dollar?
Yeah, US dollar. That's the actual dollar index. That's what it is. That's the actual dollar index. So they all will look at the dollar index. The reason why they look at the dollar index, because if they trade any majors that has USD as the second pair, usually the USD on the second pair is moving in the direct opposite direction of the dollar index. Because as the dollar index is going down, that means the USD that's on the second part of the pair, like the Euro USD, this means the dollar is weakening. So if it's on the second pair, which is Euro USD, it means the dollar is weakening. And so
the second part of the pair for like AUD USD.
Yeah. So see, this is a 1 hour right here. Mosquito in here trying to get in on the class. So let's go to June. Let's see, we said June 30th.
Yeah, so it's going up.
Yeah, so you see how that one was going down on same 1 hour.
Right.
This one is trending up.
So you can trade both, go down one and up on the other one.
Yeah, it's GU. Let's go to the hour, go to the 1 hour. See, the US dollar is weakening, so that pair that's trading against the US dollar is stronger. So It's going
Wow.
up.
Hey, Pastor Jay, I had shared in the last class about the VIX
Yeah,
and the indices.
yeah,
How it
yeah.
goes the same way as US dollar.
That's
Oh, the
exactly
VIX,
right. That's
the VIX,
exactly right, Barry.
it moves the same way as the US dollar too. The VIX, he say?
So that's
No,
what none of them ever start. They never start trading any of the forex pairs, especially majors, without paying attention to what the US dollar index is doing.
Okay.
They just I mean it's just clear. I mean I've been looking at that for months now, and I'm like, dang. I mean it's on point. When the dollar is weakening, the other pairs that are trading against the dollar are strengthening. When the dollar is strong. Oh, the other thing is they all trade gold because when the US dollar is weakening, gold is usually going up. So they trade pairs that are easier for them to trade based upon, certain things that they know how it's moving. So this stuff ain't as hard as we think it is, and they got inside that all they looking for is when to enter. They know the direction to trade. They know the direction the market's going. They knew that this market was going 330 pips. They knew this. They just want to know, where do I make my entries and how many entries do I make? I know the market's going up. They know that. And they don't trade against news. None of them trade major news. They don't trade against major news. If a major news is coming out and they're in a good position, they lock it up, either lock it into profit or just take their money and get out and wait to re-enter again. None of them trade against news. Not the ones that I've talked to. That I understand. None of them trade against the major news. It's just too risky, and they just keep it that simple. Market structure. You got a few of them that they don't. Now I will say that all of them, they do pay attention to the major news, and stuff like that. Like Barry was talking about, that's something that I haven't even got much into the news, other than the fact that I want to know where. I always look every morning and see what time trades and news is coming out in certain markets, so I know not to trade in it or something like that. But other than that, I really haven't gotten into it. But we know one thing, that major stuff like presidential elections, Brexit, coronavirus, stuff like that, we know that's going to move the market in a trending direction. That you can just, when you get something major like that, you can make a year's salary in a month on bad news, coronavirus, President Trump coming into office, Brexit announcement, major stuff like that. You can make a year's salary in a month on bad news easily. But I hope y'all, some of it, I know it's kind of moving fast, but that's why we got to record it. But I hope this didn't seem difficult at all.
No, this is concrete. This is concrete. It's good. I want to try to use this. This is good. It's not a lot to it from what you're showing.
Nope.
You think you was going fast? You was on time.
No, it's not a lot to it.
Yeah, it's
get
good.
that fibs down.
Yeah, you got to get that fibs down, and I'll in a couple of weeks, I'll come back and do a fibs training, so you can understand how to use it in both directions. We'll go in detail. We'll look at when I didn't do that on this one. I was just showing y'all the 50%, but like what you really want to look for with the fibs is also changing time frame. So if this market came down to 50%, and some of them even have, like, when they start waiting for price to come down, they already have a gold zone marked, or somewhere. Maybe like some of them have like this whole zone here in gold or in green or something like that, just marked, just waiting for price to come to it or whatever. That's another something they do. But what you want to know is when price gets down here to it, now you drop down in time frame. There it is.
Mm-mm.
So you drop down in time frame. This would have been where your 50% was. And when you drop down in time frame, you're able to see multiple candles. And so you see, came down here, we got a bullish engulfing. Price came back down, rejection. That's two good confirmations, a bullish engulfing, rejection. Okay, you got another red candle, you wasn't sure, and then bang, you got another bullish engulfing. You can get in. You take your long position right there. You got your 25 pip stop loss. And based upon the 1 hour time frame, you already know how far the move is going because you marked it from there to there. So you already, I mean, I'm gonna be honest with you, that is one of the safest trades I've seen that I've been learning.
I like that.
Because it just, when that market comes down 50%, go down on a smaller time frame to get in, and then you got your stop loss right there. And you see it gets to it. As soon as it got to it, start dancing the turnaround. Come on, y'all. It don't get no easier than that.
Thank you, Pastor Jay.
It's real nice. I would like to run it back in a couple of weeks though with the fibs too though,
Okay.
if we can.
When I come back in a couple of weeks and do this, I'll do just Fibonacci.
Okay.
Running that Fibonacci back, and so you'll know, I'll teach you the way the Fibonacci works as far as using the extensions. So you got your 127 and 1618. Right here, okay, yeah. So you got your 127 and your 1618. So I'll teach both of those. But then what I really want to teach you is how you know exactly pretty much where you want to take it based upon the previous leg.
Yeah,
So I'll teach y'all both ways because I want you to know how the Fibonacci is made to work. But then we want to teach y'all what we see actually happening on price.
Yeah, I'm excited, Pastor Jay. Yeah, this is awesome.
And then you can add this in with, you can add loading up in with it, because if I know price is going, from here to here based off my 50% Fibonacci in my first leg, then I know that I can add positions, add,
Yep.
and then I can stop adding here because I know we're getting close to the end.
Close.
I'm looking forward to doing that. Yeah.
I just want to add one thing. One of the reasons why Fibonacci works is that's natural law. If you do your research on Fibonacci, that Fibonacci is natural law, and that's what the stock market is working off of, natural law. That's why it works so well. Just that's the secret.
Yep. It's a true, real numbers, real secret. Yep, that's true. You do your research on it. That was the guy's name.
Fibonacci, yeah.
Fibonacci was his last name. Yeah, that was the guy's name who figured it out. And it has never changed. It's always been a part of the market and part of, like you said, it's a natural law. So I don't know a real big time trader that's not using the Fibonacci. Even if you don't see them on YouTube showing it, they're using it. Because listen, if I'm trying to get YouTube followers, but I'm also trying to get people to sign up for my class and pay for my courses, I'm gonna save this for my students that pay.
Right.
You see what I'm saying? I'm not giving this out for free. I'm gonna give this to my paid students.
Well, I really
We're just fortunate here that this group is, a group that Cornell has set up and the other guy set up eventually, originally, and then Cornell is, allow people that have paid for his class to come in there. And then now at this point it's just for you. Because listen, I don't mind giving this information now. They've given it to me, but I don't mind giving this information because I have no plans ever on teaching trading, and I just don't have that kind of time in my life. This is given. I don't have the time. I have a church. I do marriage and family counseling. I'm married, and I'm trading. I don't have time. I don't have time in my life to my cousin. That's one of the problems my cousins have. He's like, right, with he's got a course that he's trading, and he's got all these paid students. He got to spend so much time with them that he don't even sometimes feel like trading.
Yeah, I can see that.
Because his time is so, and he's newly married, so his time is totally taken up. So sometimes he don't even feel like trading. But fortunate for him, he makes so much when he does trade that sometimes he'll take 2 or 3 weeks and not trade, just because he needs to spend time with his wife, and he's spending time with students, and he's doing course material and stuff like that. But once he puts out a lot of, like, he'll spend couple of weeks putting out a lot of course material, and then he'll go back to trading. And I mean, he literally makes over $80,000 a month.
Wow.
Whoa.
Oh, I'm sorry. I didn't tell y'all this. My cousin's 25.
25. He's a millennial.
He's 25.
He's a millennial.
He's 25 years old.
Oh my goodness, those millennials, boy! I tell you something else, boy.
Swag?
Talking about Swaggy P, in it?
He's killing the game.
Wow.
Yeah, I seen a few of his videos.
Yeah, that's my cousin. Yeah.
Okay.
Who's your cousin?
Swaggy P.
Chris? Yeah, he calls himself Swaggy. Yeah.
Interesting. Swaggy is your cousin.
Yeah.
No wonder I was saying, oh my goodness, I need to watch myself. Interesting.
It's crazy because we was talking about trading a couple years ago here in Kansas City when he was here in Kansas City. We was talking about trading, and he was doing
You're in Kansas City?
Yeah, I'm in Kansas City.
Because he's
What part of Kansas City you at?
Actually, I've been in like Overland Park, but I just moved to South Kansas City.
We need to hook up. I'm over here in Wyandotte County.
Oh, okay. Yeah. I just moved over to South Kansas City. But yeah, he was here a couple years ago. We was talking about trading, and his trading had suffered because he was doing them TV shows and stuff.
I know that's why. Yes.
Yeah, his trading, and they was lying on them TV shows that he was on Big Brother. And they were saying, "Oh yeah, he makes $500,000 a year trade." He wasn't making that money. He wasn't making that. They was building that up for the TV show. He wasn't making that money. But when he got on that set, but the truth is now he's really making it now. He's really making it now.
That's I just discovered his page, and he's definitely killing it. I'm out here in LA right now, and I was like,
I had trying to have all those people there because he had because I was in his group and I had to get out because I needed some personal attention. I had paid for the membership thing.
He got too many followers now.
I told him, you got too many people, man. And he was with his mom and everything. And I said, you need to take care of her, but have somebody else run interference,
That's why he's hiring people now to help run his academy and help with all that kind of stuff or whatever, because he got to Chris is one of the guys. He's a really nice guy. He's one of the cats that really wants to put a lot of information out there, even for free.
Yes.
He puts a lot of information out there. If you know how to trade, you can pick up a lot from him just from his YouTube videos.
Mm-hmm.
But
I'm watching it.
He's your cousin. That's interesting.
Yeah, he's crazy too, man. Everything you see on the show is really him. But he's just like a he's authentic. He's a super nice guy. He really is a super nice guy. And he's hooked me up with some other cats and just to talk to them and whatever. And he's like, man, JB, he actually called me Uncle JB. But he's like, man, listen, I got some cats you can talk to, and you're going to see that they doing the same. Now, the guy he learned from, his mentor, is like deep. But Chris keeps it simple.
He's the one Like told me to read the book. He the one told me to suggest I read the Naked Forex book. That's what I've been reading ever since.
Oh, okay, yeah, Naked, man. I'm telling you, Naked is where it's
It got
at.
some good information in there. It got some very good information. And so, but I want to read the volume, the book on the volume as well. The one you, like I said, some good information. I got the books. I ordered that one.
I'm gonna tell you, that volume, man, is good, and I don't even use the volume part of it.
Mm-hmm.
I just use the parts up to the volume part of it. But I like on this Trading View, I have the volume. It's not the one that's on that. The one he talks about is on what Yolanda, what is
Ninja?
Yeah, the one he talks about is on Ninja. But Trading View has a similar one right here. You can see I have it on my chart.
Is the volume book the one that Ryan gave to Cornell? You guys are talking about?
Yeah.
Okay.
I have ordered it online and also printed it out too. So I'm gonna go get it mine. But I also ordered the book itself, paperback.
Yeah, so you can see that it right here. You'll see these volume lines and where it extends out, and where it extends out is what he's saying is that's where the most of their
orders
positions, their orders are in,
mm-hmm.
where it says out. And so right here again, where it extends out, that's where most of their positions are in. So that's kind of what he talks about in the volume. But I don't even use the volume part of it. I just use the mindset part that he talked about.
Right.
How to understand price and how to understand the 10 banks and when they're entering and where they enter and stuff like that. I just use that kind of stuff, and then I go and take it and add to the stuff that different people have showed me, have talked to me about. And there's some people here in Kansas City, man. There's some people here in Kansas City that's doing it big. It's a cat here in Kansas City. I forgot the dude's name. It's a cat in Kansas City that trades $100 lots.
Wow. That's gonna be us, Pastor Jay.
That's gonna be us.
Well, I'm in St. Louis. I'm gonna have to pull up on you, Pastor Jay. I didn't know you was that close.
Yeah, pull up on me. But yeah, we hey, this is I'm telling you, it's life. And those of y'all, some of y'all that follow Chris, now I don't call him Swag, but follow Swaggy. He'll tell you, and a lot of them will tell you the same thing. They'll tell you when I got it, it was just like 0 to 100. It was like I went from making a little bit of money to just making more money than I know what to do with.
Yeah, because he said he put a lot of time in that book, that Naked Forex book. And I'm also subscribed to him on YouTube, so I get when he come out with some videos or whatever, you know.
It would go back, go back and watch. You can go back and watch his older videos. Because like a lot of his older videos, he was talking a lot about trading.
Mm-hmm.
Right now, he's getting a lot into. He got so many followers, and he's building his page, and he's doing this new TV show and all that kind of stuff. So he got that new guy is really building him up into like a TV show. Now he's got Eric Thomas's mentoring, and stuff like that. And so he's, a lot of people are pulling on him now. So if you want to see some of his trading stuff, go back and go to his YouTube page and go back to some of his old stuff where you see him talk about how he marks support and resistance, and he got some Fibonacci stuff. I think he got some Fibonacci stuff out there too on some of his old stuff.
Yeah, his zones that he mark are similar to what we do anyway. So
yeah, it's similar to what we. That's why I was telling you. That's why I was saying earlier. They don't do anything different than we do. All they do is they master what they do, and then they load up. They load up on their winners.
This is oh my gosh.
That's it.
Right?
Because I'm telling you, there's no reason why not near one of y'all should end up a multimillionaire in a matter of time. I don't care if it's a year from now, 2 years from now, it doesn't matter. There's no reason why. No reason why. And I had to, and I had to think I had to have big numbers like that or whatever, because my transportation. I told you I'm a pastor. I got marriage, do marriage and family counseling. I'm married, whatever. And tell you I had a transportation company, and our transportation company makes a lot of money. And so for me to pull myself out of that, I got to make a lot of money. to give up that. But I'm willing to give that up and have other people drive for me because I want the time.
Mm-hmm.
You know, that transportation company makes me a lot of money, but I'm up in the morning driving and in the afternoon I'm driving. So that's a lot of my time. Well, in trading, I can make way more money than that and have my time, you know, have my freedom. And so, and as y'all start getting this, then we'll start showing how you can, well, say you can use like your alerts and things like that to alert you. I'll teach that on the Fibonacci. So for example,
that's what I need to learn.
When on this trade here, like when the market opens up Sunday, on this, let's say if we was using this GU trade, this is where the market closed. So right here, the market pulls up and now we see market structure change. So we got the market structure change right here. And so we know it's come down here to this 50. So right here at 50%, I would put an alert. I put my alerts on through Thinkorswim. So I would go to Thinkorswim, I put an alert at that price, and I say price entering 50% fib.
Okay.
And so when I get a text that says that price has hit that, then I'll pull on my chart, go to a lower time frame. You know, let's say this was an hour. I would go down to a 15-minute time frame, and I'll watch it for a few minutes to get in it. And then once it shows me a crossover that 8 over to 15 with some bullish pressure, I'm in, set me a stop loss. And then, you know, at that point, I might go on about my business, just checking it every 30 minutes or so to see if I see a good pullback to enter in off of. Okay. And so you can use your alerts. You can use this 50% fib. You can use all that to really set yourself up. And you can do that on, I'm telling you, you can do that on any pair. I mean, I don't know. I wish I was, I mean, if I had a random pair, if I had a random pair in mind right now,
I'm gonna USD.
I would tell you, I'll just change one to a random pair. It's $1, $DXY. What's the one of them exotic pairs?
Like USD JPY something or
nothing with USD in it. Like,
none with ZAR in it. I mean, none with USD in it.
Okay, let's say in New Zealand Japanese yen. Let's do something like that.
Okay.
Yeah. If you took just something like New Zealand, that's not a major pair. That's an exotic pair. If you took something like that, I changed all my times to not show me that much candles. Let's see. And no 50% pullbacks in that one. I need more time. Where you at? There we go. Okay. How much? Like this? See, I like this kind of stuff on a 4-hour sideways range.
You know it's gonna break out eventually.
Yeah, you know it's gonna break out eventually, and when it first starts, you know you can get 1 or 2 ups and downs, and that's probably a lot of pips. Watch how many pips this was probably.
4 hour.
Or that's 2016. So it's a good little range to trade from.
Mm-hmm.
Coming down here and taking it up here taking it down. Now, if you take this, if you go down to a smaller time frame, like this one right here for sure, if you go to a smaller time frame, you're going to see that the Fibonacci can work on that. Watch, let me mark it. I'm gonna mark it so we can find it. Oh, you know what? Yeah, 1 hour should get me back over there. Okay. Let's take it down to 1 hour. Give me some more time. All right, there it is. All right. There. That's the area I'm looking at. Let's blow that up. How to use your tools. There we go. All right, there we go. So right here, that's a 50% pullback.
Mm-hmm.
So this move here, 127 pips, it's a measured move. Once you enter again, just a little bit. Yep. Once you enter it again, you know that price is going to at least go to here. Because it was a move up, measured move up, 50% pullback. You got in. It messed with you for a minute, but it never came below your stop loss.
Right.
Boom, and there it is. I mean, you can see this is NZDJP. I don't trade this.
Pastor Jay, would you have put in another trade at that leg that came back? Would you have put in another trade after?
Again, I was doing this to show the Fibonacci, but remember, I would be on a 15. I would have been down on a 15 minute. I would have been down on a 15 minute on this. I don't know if 15 minute will give me 365. Yeah, 360. There it will. You can find it. There it is. Blow that bad boy up on a 15 minute. So there's your move, came back to 50%. And you know, I don't see any reason why if you got in right here and that's your stop loss, and you see this double tap.
You're still on the 1 hour there, Pastor Jay.
Oh, I'm still on the 1 hour?
Yeah.
Thank you. Good catch. I'm trying to get to 15. Come on.
Yeah, change it. It didn't save your time frame.
Time frame again. 60. Why does it keep going back to 1 hour? 15 minute. I want 15 minute time frame. I want 360 days on a 15 minute. Oh, it won't give me.
Yeah,
it won't give me that far. Okay, yeah. That's the thing about Thinkorswim. On the smaller time frame, they won't go back that far. But if you did go back to 15 minutes, what you would see, of course, as we remember, is more of these moves to get in.
Gotcha.
That's basically all you would have saw. Something like.
What do you do to measure those doggone pips right quick? I know you did it. I forgot how to do that. What you hit? The
Thinkorswim, the trend line.
Yeah. I see you do. I'll try to. Okay, you use that. Okay, you just click.
Use the trend line, and whoops. You can. It only shows it when you first click it on. So before
you're doing a right click. You're doing a right click on that to get that.
A right click, and then before I hit the button again, it shows me 6.147. So that's anything with JPY. The number to the left of the decimal is the 100. So 614. That's 614 pips. And if this came back 50%, we can put a fib on it on here. There's your 50%. Boom, boom, boom. So it came back 50%. So we know that this move here is going to happen again. So we could get in. We could find us an entry, get in it, and we know that when the market opens up back up on Sunday, it's getting up to there before it gets back down to here. It's getting up to there. And it's probably already formed another level of support right here. Market structure starting to change. So yep, it's ready to go. It's ready to go back up again. And we know it's going to get up to there. Why? Because the fib, when it comes back to 50%, even if it dances around for a while, it's gonna get up there. It's gonna do that leg probably at least twice. But we ain't gonna talk about that now. We're gonna talk about that in a couple.
That's cool. That's cool. Thank
Wow.
you very much. Thank you. I can watch this again and play around with it.
Yeah.
I like this better out of all of them. This not like
When I spend a little time talking to some cats that's doing it big, I'm like, okay, okay, this is what's up. I gotta get this to my peeps. That too. All right. I had no idea I was going to talk this long. I'm not one of them long-winded preachers. I usually teach for about 40 minutes. And
we appreciate you.
And I've been talking for 2
Without a
hours,
doubt.
so I'm done.
Without a doubt.
Thank you. I'm gonna stop.
Thank you, Pastor Jay. Appreciate it.
Just playing catch up. It's all good.
Y'all
Thank you.
All right,
very
take questions because I'm gonna stop the recording.
No, I'm set. Thanks. I'm
I
good.
appreciate it. I'll catch him on the next one.